Well, shareholders are up in arms over a change to the two strikes law on executive pay. An amendment allows company chairmen to cast undirected proxy votes in support of unpopular pay resolutions at annual general meetings. Angry investors say it undermines attempts to rein in corporate salaries. Sue Lannon reports.
Excessive salaries for company bosses like former Oxiana chief Owen Hegarty are at the heart of the two-strike laws on executive pay. If at least 1/4 of investors vote against corporate pay packages at 2 annual general meetings in a row, then the board must stand for re-election.
The recent amendments that have been passed by Parliament allow the chairman to vote undirected proxies, which seems to be at odds with the intent of the legislation, that conflicted parties should not be able to vote.
Last month's change to the Corporations Act allows the chairman of an AGM to cast undirected proxy votes in favour of company pay plans. Undirected proxies are where investors delegate their voting power to the chairman at a meeting.
How much does a particular company have, retail or institutional shareholders, that forget to tick a box? And that's the significance. So for some companies, this change makes not much difference at all. For other companies, it will be significant.
The federal government says the move clarifies the law, which forbids senior management from having a say on remuneration votes. The amendments come after lobbying by industry groups who argued the two strikes law was badly drafted and raised fears that company chairmen could be jailed or fined for casting undirected proxies.
The change was necessary because the first draft of the legislation was not very well expressed, to be frank.
Around 115 listed companies experienced first strikes after the law came in last year. Vas Kolesnikov thinks the amendment could lower those numbers.
If sufficient undirected proxies are given to the chairman, it will have the ability to render the two strikes rule useless, and the second strike won't happen.
I think that's overstating the case. Shareholders have always, if they tick the box in favour of the chairperson, they always knew that the chairperson was going to be voting in favour of that.
Corporate advisor Dean Patch says investors don't have to delegate their vote to a company chairman if they don't want to. The Shareholders Association is calling on investors to give them their proxy votes. It's predicting second strikes at this year's investor meetings, including for BlueScope Steel, which has been hit by big losses and a plunging share price.
The executives, whilst it may be a difficult environment, really have no cause to argue for any type of bonus.
There still may be situations where there are second strikes, but it's unlikely, in my view, that any board will be spilled.
Firms that were on the nose, such as investment house Perpetual, have drastically cut executive salaries.
I think these laws are intended to signal to executives that the days of excessive and unwarranted annual pay increases for top executives were over.
Still, there is no shortage of multi-million-dollar pay packets at the top of the corporate ladder.